Let's go to Ormond Beach and speak with Mike. Mike, thanks for calling. Thanks for holding. How are you today?
Steve, I'm doing great, and I wanted to congratulate you on your title of being #1 market timer.
Well, thank you very much. I appreciate that. A lot of hard work. The harder work is now trying to stay on top. I don't want anybody else to take that hill.
Well, you taught us a lot of great things throughout the years. You had great webinars, and you added a lot to my TFNN educational vocabulary, so I really appreciate that.
Hey, that's what we're here for. We're without you guys, we'd be nowhere, so we're glad to hear that.
Okay, Steve, I've been trading Pan American Silver, and I've been in and out a number of times, and would you be interested, would you think, what would you think would be a good price to try to get back in at?
So if we take a look at Pan American Silver, the chart that's on my screen has the daily, weekly, and monthly profiles for you. But to answer your question, I'm going to skip right to the chase, and we're going to skip those charts altogether because it's really in line with what we had just been talking about. For example, we've been expecting that the Dow would pull back, that the S&P would pull back to Stevie's red line because its price oscillator had gotten to zero. 2 trading sessions ago, I'm on a weekly chart. Oh, okay. Well, that's okay. This is actually good. So in Pan American Silver right now, Mike, I'm on a weekly time frame chart. And so 2 weeks ago, we saw its price oscillator get up to the zero level. Now, that may have been the bullish test. But if not, I was going to give you the answer. It would be 1684. So that's what the weekly says. So I just jot that down on a pad of paper, 1684. Let me go take a look at the daily time frame chart out here, see if there's maybe a little bit better signal or any type of a signal out here. You know, and the daily chart says, yeah, you know what, you might as well stay put and wait for a retracement. Now, the next level of support is at 1777 on a daily basis. You came close to that this morning, but you didn't exactly hit it. Mike, one of the things I'm looking for out here is, or I'm looking at, I should say, is this a nice little area of resistance, this little shooting star from May the 12th. And it actually worked, and price pushed its way down the very next day. It pushed itself down right into that red line support area. So maybe the move lower is over. You said, so let me get more information from you because you've been trading around this. So help me better understand the trading plan so that I don't have to be wishy-washy.
Yeah, I did a couple of short-term trades with it in the last 2 or 3 months. And, you know, like I said, I got out the last couple times when it got above like 18, and so, you know, I'm looking at an area to try to get back in.
Yeah, you know, it's a great little consolidation if you like them. Most people don't. But this thing has been consolidating since 2016, since probably around April of 2016. And we're well away from the bottom of that consolidation level in the 14 area. Stick through this break, if you would, and
Sure.
we'll wrap it up and try to point you in the right direction on Pan American Silver.
Awesome.
Steve Roach with TFNN. We'll be right back. Welcome back, folks, and welcome back, Mike from Ormond Beach. Folks, we're taking a look at Pan American Silver. In essence, we're trying to answer a question about Pan American Silver. When should Mike consider getting back in? So, Mike, during the break, I did a couple of things out here. Now, even though we're talking about silver, and we take a look at the Pan American Silver chart on the top portion of my screen here, I was just wanted to see what its correlation was to the direction of gold as opposed to silver. And we can see here, whenever the bars are above zero, then it tells you there's a positive correlation, meaning the two instruments are moving in the same direction. That is the predominant pattern or correlation between Pan American Silver and gold out here. And that being said, the reason that I went to gold was a couple of fold out here. One, if I take a look at where price is trading right now with regard to its TAAS market profiles, there was a bullish structured box that formed 2 trading sessions yesterday, as a matter of fact. And right now we're trading at 1289.60. And, Mike, that is below the bottom of the box of 1291.30. Never good to trade below a brand new box, especially that was bullish structured in nature. I don't know where the close comes in, but if we trade below the bottom of this box, it says being long is on the wrong side of the trade. Then I would say, with regard to Pan American Silver, telling you to be long today would be the wrong side of that trade too. You kind of follow the logic there, even if
Yes.
it's not as
Yep.
logical as it could be. So that's number two. Then I say, okay, let's go take a look at the gold contract, the June contract for gold, using Stevie's. Oh, did I do that? Son of a gun. I just deleted the chart. Now, that is bad news. I'm going to tell you what it said, Mike. It said we were trading below Stevie's red line and that today so far has been a test and rejection of that level. And what that really sets up, I can draw it in on this chart here, is an A to B equals CD to the downside. And at this stage, I think this is the active pattern until the information reveals something different to you or I. And that is that we should see gold get down to the 1265 level, maybe below 1265. The one-to-one area is 1265. I would then say, if this is how things unfold, this is how it looks at 1:32 in the afternoon, then because of that correlation, and as long as Pan American Silver is holding up well, that would be your entry point, assuming that we see some type of support or some type of pattern that gold has hit and completed should price move down to that area. I think that's the better way to answer your question and gauge what you should do and not worry and focus so much on the price, but instead wait till we see a good bottom in gold, and I don't see that as we speak right now.
All right. Well, I really appreciate that, Steve, and that's why I called you, because you always give a different point of view. And
okay.
Great.
Well, then let me just add to that point of view. It's really possible that if it plays out this way, 1265 will not be the low inside of gold out here. And the reason that I say that is because this really has had a shallow retracement, a less than a 0.382 retracement, which was into the bounce of May 11th out there. And that being said, then you're likely to get a 1 to 1.272 or a 1 to 1.618 A to B equals CD pattern. I don't know why they're not on my screen out here, but it would say to us that we would likely get lower price. 1246 would be one of those numbers that it could hit, or even the 1.618, which would take us to 1220. 1223. So I'd say just be patient out there. And then, Mike, if to the extent that you would track gold and the U.S. dollar index, what we see happening inside the U.S. dollar index is that it's now above its seventh wave move that took place a few days ago. And a few days ago was a Tom DeMark combo count out here. And yesterday and today have been nothing more than a test of Stevie's red line. So the U.S. dollar index wants to move higher. And I can share with you that by next Friday, if we continue to see this gradual movement higher in the U.S. dollar index, it has made another major bottom. And the U.S. dollar index is going to head to higher highs. Fundamentally, why? I don't know if it's because of repatriation or whatever else it might be out there. But, to the extent that you're going to track gold and U.S. dollar index, it is as bullish as you can get right now, the U.S. dollar index.
Yeah. Yeah, I know Basil mentioned that too, that
okay.
He had a target up there a little bit higher than where we are now. So.
Yeah, it's when I shared with you what I did, I think I can do that on this chart right here, as long as I've got you on the horn. What I'm going to do is take a look at that's a continuous contract. It's the only way for me to look at this with all this data. And we're going to skip from the daily to the monthly time frame. What you're going to see out here is price right now is trading above on a monthly basis. It's trading just slightly above Stevie's red line. And that's with its price oscillator getting right down to zero. It's just above zero. It could not possibly get more bullish than this. If this were Friday of next week, the end of the month, then we would have an uber bullish call on the U.S. dollar. So how that would impact gold, that's I know how it will impact. I know how it will impact bonds in local currency across the globe out here. It'll just trash them, just totally trash them. So that's my take, my friend.
Okay. Well, I appreciate your observations that gave me more things to be cautious about. I really appreciate that. Thanks.
That's good. We always like to say something to think about. Thanks for calling. That was Mike in Ormond Beach out there.